Welcome back, everybody. Twitter shares down sharply after the company missed estimates and lowered guidance. Joining us right now is Twitter CFO Ned Segal. He's joining us straight off the conference call. And Ned, it's good to see you.
Hi, thanks for having me.
All right, let's talk a little bit about what's happening. In terms of your daily active users, you outperformed. You beat expectations on that, and that is usually what the stock trades around. Clearly, that's not the case today. Twitter shares down by about 17%. What do you think happened here? Are you surprised by the reaction?
Well, there are a few things from this quarter. The first is that DAU growth that you mentioned. MDAU grew 17% this quarter. We broke out of this range that we've been in of 9 to 15%. We accelerated our DAU growth for the third quarter in a row. This is driven by real product improvements that we've made over a series of quarters that are continuing to benefit people, helping them find what they're looking for on Twitter faster and come back more frequently. The second issue is, although advertiser sentiment remains strong, we had a couple issues this quarter. One was more pronounced seasonality than we expected in July and August, and two was some product-related issues where settings didn't work as expected. We look at all of this as a validation of our strategy. The work we're doing around our revenue products, the work we're doing on our consumer product, these are the right places for us to be spending our time right now and to advance the things that we saw this quarter.
Hey, Ned, let's talk about those two issues. We had an analyst on earlier who said, additional seasonality, that's what seasonality is. It changes from season to season. What happened in July and August that caught you off guard?
Well, one of the great things about Twitter for advertisers is they come to launch new products and services and to connect with what's happening. Whether you're Warner Brothers and you're showing the Joker trailer where it was seen twice as much on Twitter than it was on any other service in the first hour after they showed it. It's a great place for people to do that. But when you add it all up from July and August, it just happened to be less than we'd expected. And when you compare that to the double-digit growth that we saw return, led by the United States in the month of September, we look at it as more pronounced seasonality than we had expected. An example is the World Cup for the men in 2018, where we comped that with the Women's World Cup in 2019. Still a great event, but not one that, from an advertising perspective, brought the same amount of revenue.
Let's talk about some of the issues that you had with the platform, particularly some of the advertising bugs that existed. On the conference call, you talked about a bug that read users' device-specific settings while they were personalizing their timelines, even though some of those users had opted out of that collection. What happened? What was that?
That's right, Becky. That's a great example of one of the few things that came up over the course of the quarter where we discovered that settings were not working as expected. So we asked people a series of questions before we put them into a timeline when they're new to Twitter. We want to be transparent how we use their data. We want to make it clear that their data belongs to them. One of the questions we ask is, can we use your device settings to personalize your experience? The setting was not working as expected. We were using the device setting to show ads to them. When we realized it, we both tweeted about it so people were aware in an effort to continue to be transparent. And we also stopped using that setting. There's some revenue impact when things like that happen, and that caused 3 or more points of negative impact to revenue in Q3, and we think it'll impact Q4 by 4 or more points.
Ned, just on that particular bug, is the problem that you have to fix the bug, or is the problem that when you actually listen to users saying, I don't want to be marketed to, you're just not going to get the advertising dollars? It doesn't exist.
It's a great question. There are lots of inputs that we have when we figure out how to give people a good experience on the service, whether it's the tweets they see in their timeline, the accounts that we recommend that they follow, or the ads that they see. And so we'll have to adjust how we assess which ads to show people and how to best give them an experience where if they asked us not to use their device settings, just as an example, that we won't be able to incorporate that anymore. Right. So that takes some time for us to adjust and learn from, and that's why there's ongoing impact from it.
But Ned, just to put a fine point on it, so that the viewers and potential investors and current investors understand, the reason why the cost that you're talking about this quarter and into the next quarter is because the advertising is, you can't charge a premium on that advertising anymore because it's unclear it'll be as effective because of the tracking issue. Just explain more specifically if you could.
Sure, Andrew. So we run an auction. And so the advertisers decide how much to pay for the audience that they want to target with their ads. And the more that you know about what somebody might want to see, the more compelling an ad or the more relevant an ad you can often show them. And so when you have to change the inputs that an advertiser can use to assess how much they might pay in an auction, sometimes they will hold back on the advertising. Sometimes they will choose to pay less. Sometimes they will choose to target different people. And we also will do the work to remediate these things, to figure out how to make sure that we can give advertisers the opportunity to reach people while still respecting the settings and making sure that they work the way that the people who opted one way or another expected them to work.
Hey, Ned, that's a fine line to walk. We've seen what's happened with Facebook. They got called up in front of Capitol Hill again. They were supposed to be talking about Libra, but privacy concerns continued to come up with lawmakers. I guess the question is, can you monetize to an extent that makes your business as profitable as you've been expecting and still respect that privacy? What's the answer?
Well, we grew revenue 9% this quarter despite all these issues, and we delivered $824 million of revenue, most of that from advertising. We feel really good about how we carefully balance our principles around data privacy, around how privacy is a basic human right, around being transparent with people, how we'll use their data, with giving them a good experience on Twitter. Again, it's not just about the ads that they see, it's also about the tweets that we show them and making sure that they're relevant and they're having a good experience finding the things that they're looking for on the service. In the end, we come back to our principles when we make these decisions, despite or because of regulation and discussions around regulation that happen all around the world. We feel like so much is in our control, and we choose to be principled and transparent in how we use people's data. And we still feel like we're able to give a good experience and grow the business over time as well. You
know, it's bad enough to have to get up in your time, 5 a.m., to be on a conference call to talk about these things. But even after the call, the stock is still down 17%. Are you surprised?
If I don't know how to judge the share price from one day to another, but when I look at our performance over long periods of time, we feel really good about the progress that we're making. When I look at this quarter, as frustrated as we are about some of the things that happened that were in our control, as much as we wish that we foresaw some of the more pronounced seasonality than we saw, we're so proud of the DAU growth, which is how we get to serving our purpose of getting the whole world to use Twitter and serving the public conversation. And it really validates our strategy that by innovating faster on the consumer product, by helping people find what they're looking for, by rebuilding our ad server and coming out with a better version of MAP, that we'll be able to deliver even better for people over time.
We're almost out of time, but one analyst we spoke with earlier said he just needs to see more consistency in the results. Do you see delivering that? Can you become more consistent?
Well, we're really proud of the consistency that we've delivered.
When we think about DAU growth, which is up to this quarter.
Even when we think about this quarter in the context of consistency, whether it's the consistent growth in our headcount against our top priorities, the consistency of our strategy and our prioritization, the consistency of DAU growth, and despite these issues, the way we were able to continue to deliver for advertisers, we feel really good about the progress that we've made, yet we still feel accountable for the issues that came up, and we intend to address them.
Ned, thank you so much for your time. We appreciate it. It's great to see you.